Hi, yeah, I'm Peter Chappell, and I'm the head of the Forestry Investment team here at Tilhill for the last couple of months at least.
Fantastic. So tell us, what do you actually do as part of your job role?
I'm responsible for running the whole forestry investment team. We've got a very exciting program in the next year or so of expansion, and we're really looking forward to hopefully bringing on loads more investors into the world of forestry.
And why is ESG such a hot topic at the moment?
Yeah, everyone's talking about ESG. I mean, it stands for environmental and social governance, and it's three words which really encapsulates the fact that businesses generally are starting to recognize that if you don't respect the environment, if you don't respect society, and if you're not sure of what you're doing on the governance side, then probably you're in the space of operating unsustainably. I think David Attenborough puts it very well. He simply says, just ask yourself, could what I am doing now be done forever? And if the answer is no, you're probably in the unsustainable space. The traditional view of sustainability, I think, has very much been more of a straight business cost decision. So business decisions that perhaps have wider societal benefits or wider environmental benefits will maybe rejected simply on cost grounds. But actually today there's perhaps wider recognition that ESG positive decisions, even if they cost more, can actually relate in better business outcomes.
So Peter, how can taking on the cost of sustainability benefit business?
Well, there's various avenues that it can be done, and there's a lot of debate around this. But the big and obvious one is if you are able to advertise that you are operating sustainably and you're doing positive things for the environment and society, you're going to attract more customers. You're going to gain wider societal acceptance of your business activities, which should smooth your business activity. You're going to face less regulatory obstacles. You're going to have higher employee productivity. You're probably going to encounter less risks for some of those previous reasons. And longer term, if you are sustainable, you have a longer term chance of success of being able to continue what you're doing for a longer period. So when you combine all of those things, actually looking at it from a simple upfront cost point of view is rather restrictive.
So what about forestry investment? Is that sustainable?
Forestry's benefited from having quite an evolved method of determining whether or not it is sustainable or not via certification systems, which have been around for many years and are highly evolved and internationally recognised. These are the FSC system and the PEFC system, and we operate in this country predominantly the FSC system, and most institutional investors would look to get their assets accredited to one of those systems.
So forestry can be a sustainable investment, but can it actually have a positive impact, not just avoid negative impacts?
Yeah, that's a really good point. I mean, a lot of people often talking about these impact investments and ESG, and actually if we just equate ESG broadly to sustainability, is that necessarily having a positive impact? Well, not necessarily, unless you actually go out and want it to happen. But there are mechanisms that you can make it happen in forestry, and the big one at the moment is via carbon sequestering. Obviously, trees sequester carbon. Even if you just own a forest and you're operating a baseline without taking on any particular impact, your trees are sequestering carbon. You're growing timber products which contain the carbon and are going into long-term storage. And in fact, there was a paper published in Nature recently that demonstrates how effective commercial forestry is at sequestering carbon. But if you want to make it a part of your business model, you need to be able to demonstrate that the carbon sequestered is additional to business as usual, and for that to happen, you need to adhere to the UK's Woodland Carbon Code, which is a voluntary carbon market code, and validation under that code would mean that you could produce units which could then be sold in voluntary carbon markets. So you can create a positive impact in that case and actually make it a part of your business model.
And if anyone wants to find out more about that, they can go to one of Tilhill's companies, which is carbonstoreuk.com, to find out more. You've described carbon units. Who are the buyers of these units?
Well, it's exactly all of the businesses that we spoke about at the start who maybe are thinking, well, where can I get the ESG benefits out of this? And actually, it can be difficult to determine, are these kind of companies doing this purely altruistically, or actually do they recognize that there's wider business benefits for them? For example, if they invest some money in buying carbon units, are they actually making more money because their customers like it so much and they buy more of their products, and they have lower risk and they have a longer term, more sustainable model? That type of buying we call offsetting. There is also it is present that there are some companies who are directly buying land and creating new forests and creating carbon units to do with their own activities, and that can be called insetting, and we've seen some quite major companies doing that, and actually, of course, they make a big song and a dance about it, because of course they are trying to obtain all these wider benefits, but I don't think we necessarily need to feel bad about that. It's a functioning market, and it's a win-win, hopefully, for us as consumers, them as the business, and the planet as well.
Wow, insetting, I've never heard of that before. So what's better, insetting or offsetting?
Well, I think technically speaking, they're achieving the same objective, but you could argue an insetting business is taking much more direct responsibility for their activities, and isn't necessarily reliant on markets. There could be a business strategy even behind this, because the carbon market is a dynamic market with where the price of the carbon units as a commodity changes. In fact, many commentators believe in the future the price of carbon units will increase, and the UK government has made no secret of the fact that they want the size of voluntary carbon markets to increase considerably into the many billions. In that case, the voluntary part of it may be dropped, but that's perhaps thinking about things that may happen. But in any case, there's not one that's better or the other. Perhaps it's just a decision for those individual businesses.
Are there any other impact investments in forestry apart from carbon?
Absolutely, there are, and there's many other positive externalities that can be obtained from investing money in forests. From the forestry investment side, how does that work exactly? Well, there is an expression that's been spoken about a lot in recent years called payments for ecosystem services, which is a vehicle that we could obtain positive impacts from woodland investment. A typical model might be one entity, which could be public or private, then invest money with a forest or woodland owning entity via some form of contract, business contract, to obtain certain impact outcomes. So biodiversity is a good example. There may be a sustainable forestry management baseline, which can be undertaken sustainably, but maybe doesn't obtain all of the potential that could be obtained from biodiversity management. And that's why it's been quite common in England in the past that woodland owners have been able to make contracts with the government and obtain government grants to undertake activities like coppicing or mowing rides, and all of those things can be very beneficial for species like butterflies, and it goes over and above what would be normally required for simple sustainable management of those properties.
So, Peter, I'm an investor or an institution who wants to invest in forestry, for example. What are my options?
Well, of course, talking about the UK market where we operate, there's two basic avenues, one of which is to get involved in participating in one of the kind of institutional funds that I've mentioned. But the one where Tilhill really specialises is working directly with investors who want to obtain their own properties to act as vehicles for these type of investment goals. Obviously, undertaking these kind of investments directly means you're responsible for for all of the investment risks. You're also getting all the potential upside of opportunities, and every property in a way, whether it be a forest or a woodland or a farm or a piece of land, presents a unique set of risks and opportunities. And I think that's probably where we come in.
So what services do the forestry investment team at Tilhill offer?
We're a small team of specialists. We're specialists in rural agency, especially acquisition agency. We have background in technical forestry. We also have members of the team who are experts in investment. And what we do is combine those skills and evaluate these propositions for clients and look at them from the point of view of feasibility, strategy. We're undertaking a survey, and ultimately we're determining what's the appropriate pattern of input parameters into our financial model to work out, well, considering all of the unique characteristics of that property and all of the unique opportunities and costs, what's the business case for the investment. And we'll present that advice to clients, and ultimately where we can be successful in buying properties for clients, implement those plans within the wider Tilhill business long term.
Peter, the Forest Market Report 2021 is coming up in London and Edinburgh in November. Why should investors attend that event?
Oh, well, Georgina, we're posing the question at this event, what next for woodland? And a lot of people have been saying to me, what are you trying to get at here, Peter, when you're saying what's next for woodland? Well, actually, there's been quite a lot of hiatus in the market in recent times, and especially when we're thinking about planting land, and that's where the market's really hotted up. We've got different cohorts of buyers in that market. Some of them are coming in, we spoke about carbon, buying land for carbon earlier. Some of them are coming in looking really to push the carbon angle of forestry. And those buyers are perhaps looking at land where they can often create more native woodland type schemes. Other buyers are much more interested in long-term timber value, and they're trying to baseline their land value, thinking about the long-term outlook for timber income. And then we've got a whole load of people who are somewhere in the middle and trying to do a little bit of carbon, a little bit of timber. And it's really interesting to see where all of those business models and where the outlook for all of those commodities, timber and carbon together, and in a blend, and thinking about the long term, what that's actually doing to land values in both England, Scotland and Wales. And I think it will be of especially interest to any investors who are thinking about looking at land for a carbon or a timber-based investment, or looking at as an institution thinking about that, or as one of those investors who has done that and is perhaps thinking if they need to update their strategy. We're going to be unpacking all of those topics in the context of what's been happening in the market, And of course, we're going to do our usual looking at what's been happening in the existing forestry market as well.
That's great. And everyone can receive a copy of the final printed or a digital version of the final forest market report as well for anyone who attends. So that would be fabulous too. Thank you very much, Peter.